Right, back after November. Sorry for the delay in the video, but I have been quite busy with many other things. But unlike usual, we normally start off with the daily trading systems. We are going to look at the EAs first. The Bollinger Band 2, which is almost the same thing as the Bollinger Band 1. Mainly the only difference between the two is the money management. On Bollinger Band 2 we are working much more conservative, and the money management allows for a much longer drawdown period should that happen. I just feel that the Bollinger Band 2 is a lot safer for people that are not, how must I put you, very risk hungry. It does give some quite good results as well. As we can see, I have run now the test over here from January right up to today, which is now the 8th of December. You can see the account has grown from $500 up to $762. Now if we work that out to a growth per month, it is about a 4.7, almost a 5% growth per month, which is really not bad, considering that you could not compound. Because starting on a $500 account, it is impossible to compound, and it's going to take you a long time before you can get into a position where you can compound. You know, starting on a $500 account, you might be able to compound within a year, once in a year. Where you've got, let's say, a $5,000 account, you might be compounding once in a month or once every 2 months. Where if you've got a $10,000 account, you might be compounding every week. So when you start compounding, you will see the difference in how your account will grow. I think come January I will add in some more money into this account and run it on the settings as is, and see if I can't start compounding, because when you start compounding, it does make a very big difference to your trade results at the end of the year. Considering this, you've had let's say an average of a 5% growth per month without any compounding. Should we have compounded, the results will be very, very different to that. You would double the account quite easily if you can start compounding on your account. Compounding has got a wonderful effect. It's like a snowball effect. The faster it grows, the faster it'll continue growing. That's what makes compounding wonderful. But also compounding can count against you. If it's not done correctly, you could be losing significant amounts of money, make no mistake. So yes, like normal, you must take care of your money management. Like I've said many times before, you can have a bad trading system, but if your money management is correct, you'll make money. But you can have the holy grail in trading systems, and if your money management is incorrect, you're going to lose money using your holy grail. So guys, please take care of your money management. It's very, very important. Right, now with that said, we have now done the test on the Bollinger Band 2. That was on the Bollinger Band 2. Let's go and look at Bollinger Band 1. Like normal, let me just close out all this over here. Right, this is the daily trading system over there. Where is the Bollinger Band 1 system? No, that was the recovery. Bollinger Band 1. Right, there we are on Bollinger Band 1. I'm going to start the test. Let the test run, and I'll be back with you in a moment. Right, I'm back with Bollinger Band 1 system. As you can see, we also started here on a $500 account, and it has grown all the way up to $846, which gives us an average of, let me just see here, 6% a month. Now that is without compounding at all. The total growth has been about 70% for the year, and you didn't do any compounding. Like I said before, this system is a little bit more risky than the other one. The money management differs, but you can see the growth has been very, very good. I personally have also got this one trading on one of my accounts, and the same as Bollinger Band 2 is also trading on one of my live accounts. I trust them both, as I have done tested it quite intensively, He first ran it on demo for 6 months. It has now been running on a live account for also about 6 months. But Bollinger Band 2 has been running for about 3.5 months live now. Come January, I will definitely be increasing both the accounts so that I can start maybe compounding on a sooner basis. Because going like this, it is just taking a little bit too long before you can start compounding. Like I said, on a $500 account, you can maybe compound once a year. Where if you increase the account to, let's say, $2,000 or $5,000 or whatever, you might be able to increase at least once a month or maybe more, depending on how the markets are going. Now, with that said, let's close this down and we go and look at the monthly trading, how it's been doing. Let's go look at the FTSE number one. The FTSE on the daily trading system, it has really been a great disappointment this year. It didn't make any profits. It is still in a small loss though, but yes, it wasn't as promising as it always has been. As you can see, we had one trade over here which is still on the 28th of October. It wasn't triggered. It was only triggered here on the 4th of November. It went up, right? We had a close above the 161, so we brought our profit, or at least our stop loss, to the break-even point where we were taken out on break-even just over here, right? Like I said, the Brexit has really affected the markets, not in a nice manner, put it this way. Anyhow, let's go look at the SPX. The XPX, like normal, you can see it has been quite profitable once again. Here towards the end of October, the 25th of October, we had an entry. We had a close above the 161. It came down here. Let's just put a line in there. Where are we? Where are we? Let's just, there's the line. Let's just go and put in the line on the top of that one there, and you can see we're taken out at break even again over there. Same over here. We had another signal. Although we were only triggered in over there, we had a close above the 161, brought take profit to break even, and we were taken on a break even. Same here, once again, same thing. We had an entry, a close on the 161, a close on the 261, and we brought the profit, the stop loss to the 161. We were taken out for a very small profit on that one over there. Now, the S&P has delivered very, very good trades this year, and luckily for that, it would make up for the losses on the FTSE. Later on in the new year, I will develop a automated trading system similar to the one I've got on the FTSE that can run on the S&P as well, because I think the S&P is also delivering very good trading opportunities, and I don't think a guy must miss out on it. Instead of just trading it all on one on the FTSE, I would like to split it up between the FTSE and the S&P both. So I'll have one Bollinger Band system running on the FTSE and another one running on the S&P. That should be able to give us some nice profits for next year. I know that history doesn't guarantee any future profits, but at least it'll give you an idea of what to expect and what you can expect for the coming trades or whatever the case might be. I must say that has been very good. I just want to see, where is it? Yeah, righto. Yeah, we've got we had an entry on the divergence trade. As you can see over here, this entry was created on the 27th of November. We will wait for 1, 2, 3, the fourth candle over here, which then came on the 3rd of December. We had put up entry for a sell at the bottom of this candle. Our stop loss is up there, and of course the take profit is 3 times this distance over here. Now, as you can see, this trade wasn't it was entered over there, just down there it was entered, and it is reversing up against us. It is very but luckily there's a lot of room to go here to the stop loss. Normally the divergence trades are normally very good trades, and the unfortunate part is they're far and few between. This year there's only been 2 divergence trades, so let's see how this one works out. I hope it'll turn around and give us some profit, some healthy profit as well, before the year runs out. I'll be closing the EAs, the automatic trading systems, as soon as they run out of the current trades that they are in. As you can see, we are here. Where is it? We here on the one system. We are quite healthy, nice profit, a little bit of profit over there. And I'll just be waiting for these trades to close out. As soon as they close out, I'll be closing down the automated trading systems for the year. I just don't like being sitting in the trades over Christmas. And here, this one, of course, I'll just leave running to see where it'll go to. I will monitor it over the Christmas period. I doubt it whether we'll be out of this trade by Christmas. I hope so. The daily trading systems like the SB, I will continue looking, monitoring. If I get an entry, I will take it, because these are, how must I put it to you, long-term trades. So it's okay to have them open over Christmas period. It's not too bad. It is taking a chance to leave any open trade over a Christmas period or over any extended time when the markets are closed, because you never know where the market will be opening. So that could count against you. But anyhow, in all the years so far, it hasn't really affected me in any bad manner. So with that said, that is all the trades up to the end of November. I'll get back to you as soon as in December, before Christmas hopefully, and let's see where we end off for the year. I must say the EAs have really delivered some nice healthy profits for the year. I'm very happy with it. It's only the FTSE daily trending system that hasn't delivered good profits, but who knows what could happen. Thank you and happy trading.